It's Bruce Ferris, the Windermere Real Estate. It is the 25th of November, just before Thanksgiving weekend. And let's take a look at the statistics from this last week in Seattle real estate. We look at anything from 145th down to Othello. We're looking at 3-bedroom homes built prior to 1980 to have a little more consistent. Look at the market. Our different columns here, the greens over here are actives. Then we've got pending inspections, pendings, pending inspections, and pendings that went off in 6 days or less. And then we have our percentages over here. So let's take a look over on the right-hand side. Total newly actives down again to just over 630, about 1/2 of what the highest numbers were this year. Total newly actives at 73 for weeklies, 1/3 of highest numbers. The pending inspections are at 87, just under 90, and the year's highs were only at 130, so it's still fairly high. Weekly pending inspections just under 60, and the year's highs were just in the low 90s. Pendings total at 450, while the highs were in the mid 500 range, so it's still pretty healthy. Total 6-day PIPs and PIs, those are pendings and pending inspections, that's at 124. That's about half, just a little bit off of half, which was at 220 for the high for the year. Weeklies at 25 of those that went off 6 days or less. Year's highs were at 65, so that's just below half of that. Weekly total pendings and pending inspections still of 100, which is 158% of the newly actives, which is very strong. Total pendings and pending inspections in relationship to newly actives is still at 85%. MLS Market Watch, they do their own looking at it. They're showing newly active way down at 56, which is half of just half of what it was a couple months ago. Pending still strong at 170, which is really quite high in relationship to that 56. I think that's what that number was. And interestingly, list price reductions at 52, which is fairly consistent. And then finally, contingent offers that were accepted, still only 3. We barely see that taking place. So we're still seeing a market where let's call it 1/5 of the marketplace now, at call it 20%, 20 to 25%. 1/5 to 1/4 are still going off market within 6 days of hitting the market. But the total pendings and pending inspections is still quite healthy at 85%. And newly actives significantly down at 630 versus the highs we had at just over 1,000. Here we go, at different times of the year. This was a surge at this point, but nonetheless, just over 1,000 on that. Same thing for pending inspections. They're holding tight at the 87 mark. The highs on that were in the 120 mark. There's 129, 130, 131. So that is the market for the week. Let's take a look at current median sales prices and see what the trending is there. Here's our local. We've got in the green, this is the Central North Ballard, 740 rising up to 757. That's a 60,000 rough differential in the last few months, heading back upwards. The overall Seattle in black is 690, heading up to 715. That's a pretty strong recovery. Capitol Hill's all over the place. Central Capitol Hill, because of the different types of high-end properties that are hitting the market. Let's go back, take a look at 10-year median sales price, and that'll give a pretty big picture. What's the overall big picture in terms of prices? Here is May, June of last year, where the market did a correction, and then it started working its way back upwards again. Let's go take a look at how many days on market things are right now. And in the north end, which is the green, they're dropping back down again to an average of 8 days on market from a high of 11 in the last week. Back in June, we were up to a whopping 28 days on market on average for the north end, and somewhat similar for the rest of Seattle. The areas we're tracking. How many houses are actually out there on any given moment? Let's go take a look at that right here. Our market shows overall Seattle at 500 after a low down to 98. That's quite a bit of difference. Ballard coming up from 50 mark up to 129 or so. So it's a healthy inventory, which is really good for everybody. Same thing for the south end, and Capitol Hill's okay in the 40 to 60 range. All right, let's go take a look at monthly supply. How many months of inventory is currently out there? Not super high. I mean, 2.5 months for the south end here, which is typical. Our mid areas are in the 1.2 to 2 point, basically. Actually, I'll put those all basically in the 1.2 to 1.7 now. All right, let's go to last year's volume, last 3 years. Now let's take a look at when things go off market. You can see the changes here in the black. We're dropping down from September, heading down to November. It's the same thing every year, and we are right coming up on that. So we'll start seeing that. But we're seeing a little bit of rise in pending sales at this point. It's very interesting. Let's take a look. I have 2 more, I believe. Price per square footages on those, on the medians. So we're pretty much equal to right about there, which is October of 2017 for the north end. For overall Seattle, we are equal to February of 2018 at this point. For the south end, we're equal to about the same time frame. It looks like the Capitol Hill area, the mid Seattle, I should say, is on its way up. And let's go take a look at the sales price list price ratios. And this is when we had those incendiary moments where properties were selling 110, 105, 112% to list price sale price ratio. So our last time we saw that was basically just prior to the June correction. We saw a dip then, of course, in the first part of 2019, and we've been somewhat flat. Since then, we had a little bit of lower pricing going on with the central area, and the same thing with the south end. This can be seen at, you can get back over here, tinyurl.com, BP Statistics Daily. You can click on that and get access to this on your own if you'd like. And that's it. We're at 7 minutes, 37 seconds. Thanks for listening. Hope that's of help. As always, check in if you have any questions. Talk to you soon. Take care.